Hello and welcome back, everyone, our esteemed audience, our key dignitaries, and our tech partners. Uh, we'll start with the first panel of the day, which is on leaders' perspective, trends shaping the banking and financial services industry in 2021 and beyond. With this, I would like to invite the moderator for the panel, Dr. Ravi Gupta, founder and CEO, Elets Technomedia, and editor-in-chief, the Banking and Finance Post. Joining him would be Shalini Warrior, Executive Director and Business Head, Retail, Federal Bank, Mr. Ravi Subramaniam, Managing Director, Chief Executive Officer, Shriram Housing Finance, Vijay Kumar, Chief Executive Officer and Principal Officer, Go Digit General Insurance, and Mr. Madhusudan ML, Managing Director and Executive Officer, NSDL Database Management Limited. With this, I would like to hand over the panel to Dr. Ravi Gupta.
Namaskar everyone, welcome. I am Ravi Gupta and I welcome you all to the BFSI Leadership Summit. And this is the sixth edition of this summit, which we are doing annually. And in the pre-COVID era, this summit was happening in person. And we have gone virtual in this COVID situation. And I am deeply thankful to all our esteemed speakers who have joined us here and all our audience who are watching us on the Avatar platform. The topic of this panel is Leaders' Perspective, Trends Shaping the Banking and Financial Service Industry in 2021 and beyond. So we all have gone through this 18 months of ordeal of COVID, and things have dramatically changed in the BFSI sector thanks to COVID. The digital adoption has gone big and really big in the last 18 months, and it has deeply changed how the BFSI sector works. So let me request in the beginning to request your panelists to talk about how did the COVID-19 crisis help shape the BFSI industry and the recovery of the global economy, and how are we seeing the next 6 months, because we aren't in a situation to predict any further anyway. So requesting uh, starting with this comments from Shalini Warriorji, and we can have each of the speakers speak about around 5 minutes each, so that we can take multiple questions. So over to you, Shalini ji.
Thank you very much. Good morning, everybody. Pleasure to be on this panel. I hope everybody is keeping safe and healthy during these difficult times. So I think the core question that Dr. Gupta asked is how did the COVID crisis kind of shape the banking industry or the BFSI industry more broadly speaking? And what are the kind of tenets for the global recovery of the global economy? So I'll kind of take it in two parts. In the first part, on what it has done to the BFSI industry. The first thing, I think no conversation can start or even continue or even end without talking about the whole aspect of digitization. Now, the banking industry as a whole was always quite digitized. There were lots of aspects of it that were digitized. There was a lot of progress being made on digitization. But what we've seen in the last 18 months is honestly the level of digitization has been notched up higher. So if you look at customers, I think on the retail customer side, a lot of it is digital. If you look at Federal Bank, about 92% of retail transactions are digital. But where the big difference happened during the COVID crisis was that the corporates, the small and medium enterprises, these kind of clients also started taking extensively into digitization because it became honestly to some extent a necessity. So we looked at it, their transactions, whether through internet banking or through API banking, host-to-host connectivity, has notched up several scales higher. And today they're very comfortable being digital. So that was on just in transactions. But even things like origination of accounts, a very large number of accounts are now originated in a digital way. Video KYC is used extensively. Tab bankings are used. Neo banking partnerships are used. So the whole origination kind of landscape has also changed. So I think the first theme is around digitization. and it is virtually all pervasive in the banking industry. And I'm sure my fellow panelists will talk about other industries where the same trend is there. So that's one aspect where I think BFSI, COVID-19 has played a very important role. The second is when it comes to employees. So if you look at customers at one end, there's employees. So in the banking industry, if you go back in time, I don't think the banking industry was kind of very conducive to work from home. Even today, I think there are challenges on work from home. But you see what happened between March 2020 to a kind of April, May, where necessity is the mother of invention, probably. So everybody was forced to look at alternatives of work from home, at least for roles that are not branch led, that are not customer facing. So the whole work from home became a very important concept. And given the nature of the industry, given the security risks that are there in the banking industry, it was not like we could just go home and start working from home. Banks had to perforce do a lot of stuff around security. Just as an example, what Federal Bank noticed was our call center agents had not been equipped to work from home. It had never been conceived of earlier. Our BCP was always about two centers, both in different cities. So one would take over when the other was not working because of a flood or a fire or an earthquake. But in the COVID crisis, that became a little bit of a challenge. I think there's some background noise coming from somewhere. I'm not sure where it is from. Anyway, so the contact center therefore had to kind of move to more of work from home, and that was done with a whole host of security norms around it, because you couldn't just let them go there and start working from home. So I think the whole employee kind of ethos and philosophy has changed, and today it's taken for granted, but if you go back 18 months back, it was not there. That's the second aspect. So customers, employees. The third that I would like to highlight is more a leadership attribute, and I think we'll cover it a little later, I'm sure, on the panel also, which is around how do you make decisions with ambiguity around you? How do you make decisions in an environment where you're not really sure what's going to happen next? You think everything is recovering, Omicron comes on, something else comes on. So I think that was more a leadership attribute of how BFSI and banking industry had to change. So I think COVID-19 has had a lot of changes, I think, for all of us. But if I were to narrow it down, it would be around digitization for customers, around the whole ethos and philosophy of more flexible working arrangements for employees, and a leadership attribute of decision making. Turning to the other part of it, the global economy, I think, clearly things are looking better. They had started, the green shoots were visible. Even in India, the green shoots were visible and things were, looking better. You could see credit offtake is still not where we would like it to be. There's still some way to go. Liquidity is flush, so there are lots of opportunities for liquidity to be deployed in. Having said that, today, if you'd asked me this question 3 weeks back, I think it would have been a different answer. But today, where we stand in the throes of what Omicron could potentially result in, don't know what is happening, there is a little bit of a trepidation. Notwithstanding that, if you keep that aside for a moment, I think the prospects are looking good. The traditionally good quarter of Jan, Feb, March for the banking industry will, in my view, be a better quarter. As we speak, the monetary policy has kept the repo rate unchanged, which is, I think, a good indication for the market as a whole. So I think these are good indicators that are happening. So that's really what I would say as kind of introductory notes. Dr. Gupta, I'm sure my fellow panelists will have a lot more to add to that.
Thank you, Shalini ji. You have given a great overview of the situation. And let me request our next speaker, Ravi Subramaniam, who is the Managing Director and Chief Executive Officer of Shriram Housing Finance, to give your introductory remarks. Please unmute, Ravi ji.
Ravi, you're on mute, Ravi.
Okay, so thanks, Shalini, for that wonderful introduction. And I tend to agree with almost everything that you have just said. And what's actually happening is that digitization is taking over. But you need to keep in mind that banks were always prepared for this. For the last 5-6 years, the kind of investment that's gone into technology, that's gone into automation, that's gone into making sure that you kind of move away from the human interaction for completion of transactions has kind of taken over. And the key change which has happened because of COVID is that the customer adaptation of those digital processes has kind of just exploded. For example, if you look at we always had an app for customers who wanted to interact with Shriram Housing Finance, but the number of customers on that app uh, who are doing transactions on that app, who are actually reaching out to the bank through that app, who are actually raising customer requests, customer complaints through that app, has really gone up manifold. You'd be shocked. The number of customers who actually have started using the app has gone up about 6 times in the last 1 year. And to me, that's the sea change. I heard Shalini talk about the fact that the common man on the road is adapting to technology. You have these shopkeepers who are now, how many of us actually now make payments in cash? You get home delivery and then you pay through Paytm or Google Pay or any of those other means. So I think that fundamental change has actually happened. And you know the I would like just narrate a very interesting incident which happened to me. Somebody had one night I had actually taken an Uber back from the airport home, and this was about 12 o'clock at night, and I just wanted to tip the driver, and I asked him if he has Google Pay. He didn't. Okay, but he gave me his daughter's number, who's a student, and said you can actually transfer money to this account, and I did that and paid him the money instantly. I think look at the kind of adaptation of technology which has happened, and I think that's what COVID has driven. Uh, but as far as banks are concerned, as far as NBFCs are concerned, as far as HFCs are concerned, all of them are ready. Uh, we were waiting for customers to adapt, and that's happened. The second thing which I want to probably also point out as one of the impacts of COVID is that organizations have become a lot more focused on people. There was a time when organizations would just look at their P&L, ignoring human assets, and would just look at what's good for business. But I think a lot of people have actually changed their perspective from what's good for business to what's good for employees. Employees would like to come back to a very safe haven. They would like to come back to an office which is clean, which is sanitized, which at least gives them the comfort. Because if you look at a mind which is anxious, it does not perform. So you need to elevate that anxiety in the minds of people, and I think that's what COVID has done in terms of bringing about a change in the thought process of most of the leadership in how to approach business. But having said that, I think one of the negatives of COVID, which I should also hasten to point out for the banking industry, and I think which I guess somewhere the banking industry is not getting it right. Shalini, maybe you could step in as the sole banking representative on this panel, is that banks have somewhere stopped lending to the MSMEs and the manufacturing sector. I think it's their risk averse approach which is driving them to this. But and all of them are just, and I say this with a lot of emotion. A lot of them have just started focusing only and only on home loans. And I somewhere think that that's going to be a very bad strategy, because at some point in time it's going to start impacting the bank bottom lines. And unless banks really go out, lend to SMEs, lend to the manufacturing sector, unless banks go out and uh, put their money in building a nation, I do not think we will get out of COVID and its impact so easily. So banks have a role to play, and their role to play is in rebuilding the entire economy. The government is pushing them towards it, yet I don't think the banks are doing what they're supposed to do in this. They're just focusing on the low-hanging fruit, and that's it. So that's my brief introduction to COVID and the impact, and what's how it's driving the change in the banking industry. I would let the other panelists take on from here now.
Great inputs, Raviji, and I think you highlighted this human aspects which have become very, very important, and of course, lending to the MSMEs, which is critical for the recovery to happen. Let me request our next speaker, Vijay Kumar, who is the CEO and Principal Officer of Go Digit General Insurance. Over to you, sir.
Uh, Hello, everyone, and good morning once again. Um, like all other sectors, I think insurance sector, and I'm particularly talking about the non-life insurance, was also equally impacted. Uh, but I think because of uh, because of various measures, certain insurers that have taken place, in advance. I think situation was not as bad as uh, other sectors like auto sector. The insurance sector actually grew reasonably. Of course, during pandemic 2021, it was just flat, but subsequently it recovered very well. Uh, for us as a company, we had I agree with Ravi. A lot of other companies as well as our companies, we had planned remote working. In the beginning, when we started our company in 2017, be it our office space, or be it call center, customer experience. So all areas we try to develop, where we can work remotely. However, the challenge, as Ravi rightly pointed out, was that our customers' acceptability, adaptability, and the partners. So as you know that non-life general insurance, we have to work with lot of partners, lot of garages, lot of surveyors, lot of investigators, lot of and the courts who are not digitally equipped. So that was a big challenge. But subsequently, I think during this pandemic, everybody was forced to come on board, kind of, and things worked so well. As a company, I can say that our on the service side, we could settle our 73% plus claims remotely. I'm talking about motor and mobile insurance, and we could do some enrollment inspection, to the tune of 90-95% without even visiting, physically to the spot. Like banking and other sector, I think the insurance was definitely at a center stage, which also in a way compelled the companies to find out ways and means to cope up with the challenges. I think pandemic primarily taught three things. One, uh, it also brought into focus the importance of health insurance. Industry also realized that everyone, the ecosystem, partner, agent, and customers and employees need to be on board. And more and more insurers now started investing towards product innovation and technology. So that was a major change that has happened. I can say now the situation today is that um, I can draw some parallel. You have a TV and Netflix at home, and you have watch TV and watch films at home, but still you like to go to cinema for watching film. So it's the same scenario today. The situation is that we can definitely a lot of employees are working from home, and now they are coming to office just for a change. So that's a kind of change that has taken place after pandemic. Now coming back to the the health of the insurance business, I think uh, the motor was a big challenge because there was slowdown in the car sales and commercial vehicle sales. There was also travel. There was hardly any travel happening, and as a result, that portfolio was also in the negative. But health grew significantly, and we as an insurance company, innovative insurance company, try to develop quickly some good products which were perfectly suited to the COVID patients as early as in January, February 2020. So, and due to our technological capability, we could offer those products and service those clients who have opted those products. So all put together, I think as a company, for us, the impact has been very, very minimal. We grew during pandemic also at a rate of 36%, and currently we are growing at the rate of 90% plus, and the service standards have continued to be same or even better than what we saw in pandemic.
Fantastic. So we had some great news about the growth even in the times of pandemic, and I love that analogy of Netflix, that we can watch the movies anyway at home, but we still go to cinema. So it's an amazing analogy. Uh, Let me request Madhusudan ML, who is the Managing Director and CEO of NSDL Database Management Limited. Madhusudan ji, over to you.
Yeah, thanks, Dr. Ravi. Thanks, everyone. I think most of the points are already shared, but I think I'll just draw on two pillars where the impact is felt. They were, I think, on the business models. Overall, there has been impact in everyone the way the business has been held, right? Ravi said, while all the BFSI as an industry were tech savvy, let's say even let's from about last 7 8 years, I think all of us have been building the necessary infrastructure and tech stacks required for us to be completely digital. But I think suddenly the adoption has seen a sea change over the last 18 months or so. So I'll draw from my experience in the capital markets, and I'll share some numbers to give a perspective, right? So all the capital markets, whether it is exchanges, depositories like us, or the stockbrokers, or the asset management companies, all of us had the necessary technology and infrastructure and digital interfaces for extremely smooth onboarding of customers and transactions. One number, so in the asset management industry, typically about 30 to 35% of the transactions used to be physical. And March 19, the COVID lockdowns have started. April, May, the physical transactions from 35% have dropped to 0.5%. I don't think any one of us have done anything differently in those 2 months. It's just that the entire ecosystem started using the infrastructure that was already built, right? And that's a huge change in the entire set of customers, partners that yes have already inbuilt tha, but why don't we start using it? I think that's been a extremely good encouragement for the entire industry to keep innovating and keep putting more such tech-enabled initiatives. So that's one number to give a perspective. Second number, in capital markets, we had about 4 to 5 crore customers, whether it is investing through stock markets or mutual funds for what last 2 3 decades of capital markets being in existence. In over last 18 months, we have added over 2.5 crore customers. Right? That's the space at which people have taken towards the financial markets. And this would not have been possible if not for the infrastructure that's already been built. The reasons could be many why the customers have suddenly started coming to equities or mutual funds. But I think if not for the infrastructure that's already there, this kind of rapid progress from the customer side would not have been possible. And the third number which I would want to share is again, I think Ravi spoke about the payments and how we are using UPI. Just to give a number in perspective, November, I think, last month, the quantum of transactions that have happened through UPI is 8 lakh crores. And this is 6 times of March 19. And I think it's not going to happen if only the select 5%, 10% of users use this mode of payment. It is pervasive. It is used extremely widely across the country, across segment of customers, across geographies, and that is where we are seeing this kind of transactions. I think as a country, as an industry, there's been a tremendous effort that has been put across thanks to initiatives like Jan Dhan, Aadhaar, UPI, and disintermediation of some products. A lot of work that has happened over last 1 decade, And I think sometimes we miss why how these would add up. And now we see all of them culminating towards a significant impact, which is, I think, deep and long lasting for the industry as we go forward. And also, one other very interesting stat which I would want to leave with is like what again Vijay Kumar said on the customers wanting health insurance. The stat I was looking at last year is for the first time since general insurance existed, the health insurance premiums were higher than the motor insurance premiums during the last year. And that shows what the customer's choices and preferences are, right? And so I think the impact that is caused by COVID is deep. It has changed behaviors both at the organizations and both at the customers' end. And I think in the long term, it's going to be largely good and beneficial for everyone. Yeah, thanks.
Sure. Uh, Great inputs, Madhusudanji, and thanks for this highlighting this the amount of digital payments and digital transactions which are happening have grown in a big way, and which has a big larger impact on the overall BFSI sector. Let me uh, uh, take this discussion forward, that we have had a quantum jump in the digital adoption in last 18 months by the users, and there's a whole new comfort coming in the user and in the customers for using a digital mode of transactions. Now, what next? How does it impact the BFSI sector or the ecosystem as a whole? Asking about that, are the bank branches going to get reduced, or are the number of agents which are going in the field for doing customer interactions, are they going to get reduced, and that investment will move to digital? So, are we seeing some reshaping of this industry as a whole? So, what are the short term and long term changes we expect because of this tremendous shift we have seen in the last 18 months? So, is it like going to change our organizational structures, processes, systems, appraisals, all that stuff? So, let me request Shalini to give her views on
Thank you.
this.
Thank you. And I think before I answer that, if I can just come back to the point that Ravi made about lending to MSMEs, I don't think it would be fair for me to answer the second question without at least a reference to it. That may need a separate panel discussion on its own, Ravi, but I think I can give you the headline of it. I think the headline, you're right, there has been some hesitation in it. And I presume the core issue is, the traditional models of underwriting are undergoing a huge amount of change. So if you look at it, traditionally, banks like us have relied on cash flow analysis, balance sheet analysis. You can't do that in this environment because today there is very little, your past history of cash flow is not an indicator of the future. And so the whole traditional model of underwriting has to change. Are we doing the thing? Yes, there's a lot of work being done on it, no doubt about it. But I agree with you that it will take a little time to evolve that. The government has intervened. I think things like, the moratorium obviously helped last year. The GECL 1.0, 2.0, and now 3.0 has helped bring in some. Uh, but yes, there is more to be done. There is no doubt about it. And I think, banks collectively are working towards seeing what best we can do for the thing. But it'll mean a change in our model of underwriting because the past is no longer a predicator of the future. So, yeah, so to come back to the question now that's addressed, I think this whole dilemma of physical, digital, phygital, one hears this dilemma very often. And I'll give you kind of my perspective, Federal Bank's perspective. First of all, the overarching theme for Federal Bank at least has been, and we say it very often, our mantra is digital at the fore, human at the core. So just to repeat that, digital at the fore, human at the core. What we really mean is customers should have access to all the digital technologies that are required, whether it's mobile, internet, tabs, everything possible we will, and continue to invest in that. Having said that, at the core of it, there is a human angle to this. There is a human element to it. There is a relationship management expression of interest from customers that they would like it. And to some extent, it also relates to what Mr. Vijay Kumar was saying, this whole Netflix at home versus going to the cinema kind of analogy. So the concept really is that I don't think we can say that, it'll only be digital or it'll only be physical or it'll only be digital. I think there will be different, I think customers will have a choice. Customers should be given a choice and there will be a choice. If you again take it into practical examples from what Federal Bank has been doing, and I'll just give two examples in the interest of time. One is during the pandemic in June of last year, we actually went ahead and launched a web capability and supplemented it with an app capability called Fed Swagat, which was enabling customers to actually book appointments to come to the branch, because we realized that customers did want to visit the branch. They did need to visit the branch, whether it was gold loans, loan agreements, some things that they needed, lockers, whatever they needed to come to the branch for. But there were a challenge in that they had to come and wait outside because of all these norms around social distancing, crowding, etc. So we actually went ahead and did this Fed Swagat, where they could take an appointment and come at the appointed time, give their reference number, and they would be allowed. And it proved to be quite popular at the height of the pandemic because customers had a genuine need to come. So that was one example of where we did digital at the fore, but human at the core because the branch was available. The second example is some of our more recent tie-ups with neo-banking partners, where we've gone ahead and tied up with fairly extensively with a couple of neo-banking partners to source digitally enabled accounts. That's another example of where a branch continues to source accounts, but this new capability that has come in, which is designed to suit the salaried millennial who's born with kind of, the mobile in his or her hand, it's designed to suit that. So both coexist, both work. One gives me X number of accounts, the other gives me probably 3X number of accounts, but both coexist. So the broad point I'm saying is I don't think it is an either or kind of story that would come up. The story that would come up is there are different customers, customer needs are different, both will need to coexist. There will be a need for branches. Branches will evolve from doing normal transactions. I don't think any of us any longer go to a branch for a normal transaction, but we potentially go there for more evolved transactions, whether it's in the form of advice for investments, whether it's in the form of gold loans, etc. At the same time, there will be a need for digital, and we will continue to digital. So the dilemma is not about either or. The dilemma is how do we make sure these both coexist and are optimized from a cost perspective, that the right transaction is happening at the right place. Clearly, the infrastructure that the government has put in has played a big role in enabling that. I think the Jandhan, the Aadhaar, the mobile, all of that stuff has helped make it more digital. So the summary of what I would say is, there is a role for branches, and branches will continue. There's a huge role for digital. Digital will continue, and customers will choose what is most appropriate for the circumstances in which they are.
Great, Shalini. Thanks for addressing both the issues regarding the lending and also the point regarding digital or digital. So let me request views of Ravi Subramaniam ji on this issue. Please unmute Ravi ji.
If you look at the way transactions have progressed, the way customers have started dealing with NBFCs and HFCs and banks, I mentioned earlier that customer adaptation of digital has actually increased manifold. But having said that, I just would like to sound a word of caution here. Not every transaction that the banking industry does lends itself to a digital adoption. Now, if you go back and look at the laws of the country, okay, unsecured lending is easy to do in a digital manner, and that's the reason why you see most of the fintechs trying to play in the unsecured space and the small ticket space. Now, you may question as to what do they do different from the rest. But the best of best that I've seen in the fintech space, in the unsecured lending space particularly, are people who work on an algo, and they bank on the fact that any retail portfolio will have a certain risk. They build in that risk into the price, and then they go ahead and just lend the money, hoping that If I lend 100 rupees, maybe 95 will come back, 5% I will lose. And they work and pray that that particular algo works. And that's the fundamental basis of most of the fintechs that you see today in the unsecured lending space. Now, when you come to secured lending like a housing finance, secured lending, you cannot eliminate human interface completely, because till such time that all the land records in this country are digitized and accessible, you will need human intervention. Two, you will need to get legal documents signed from a customer, for which you need a certain level of human interface happening. Digitally signed uh, documents are not accepted for secured lending in this country. Tomorrow, if I want to file against the customer to recover my dues, a digitally signed document is not accepted. I need a wet signature there. So somewhere there are some products which lend itself to digitization, some products don't. So till such time that all products lend themselves to digitization, you will not be able to go 100% digital. That's point number one. Point number two, I think customers should be able to choose whether even when you are able to digitize 100%, a customer should be able to choose, or given the choice of whether he wants to interact with a machine, or whether he wants to interact with a human. You can price those transactions accordingly. But imagine the frustration that you face today when you call an airline and have to wait on the line for 30 minutes because there's nobody there to answer the call. Now, you can't do that in the banking industry. The customer will move. Okay, and he has enough choices at this point in time, and all competing for the same customer. Third, I think what you can do as an NBFC or as a forward-looking HFC is that you will need to build digitization in your process. Elements which do not require human interface, and elements where you will be able to deliver the same level of customer delight, you should try to digitize. For example, okay, we've, before COVID, our underwriting model was very specific. Our underwriters would go meet the customer and sit with him for an hour, understand his business, understand his cash flows, and then underwrite the loan. Now, post-COVID, that suddenly took a beating, because customers wouldn't want to meet your underwriters. Your underwriters were hesitant in going out. So we brought in the concept of video personal discussions, wherein the customers would be interviewed on the phone, and the video recording of that customer discussion would then be tagged to the loan and the LOS, and accessible for posterity. And the benefit of that suddenly started dawning on us that, one, if a customer goes delinquent, we have access to what the customer said and did during the personal discussion, which was hitherto not available. Okay. And two, any personal discussions which went wrong or the customer went delinquent, we would go back and now pick them out and use them to train our credit underwriters going forward, saying what was done right in that personal discussion, what was done wrong in the personal discussion. So suddenly the benefits of taking out the human intervention in that sense kind of was available for everyone to see. But the challenge that I faced there was not that the customer was not wanting to do a video PD. It was the age-old credit thought process that I have to sit in front of the customer, and that look in the eye, which will give me the comfort, suddenly went away, right? It was, you were seeing him on screen rather than seeing him in front of you. So my credit underwriters suddenly started feeling a bit jittery, saying they are not meeting the customer directly, body language, sitting in front of him. Now, it took a while for that to change, but now that's changed. So now 25% of our loans are underwritten through a video PD and not through a physical PD. That, as a corollary, that also gives me a fair bit of cost saving. But the cost saving was not the intent to do that digitization, right? To do that, to bring that technology intervention. Two, I think organizations like us, if you look at our group, if you look at Shriram Group per se, Shriram City today spends a lot more money on technology than your regular fintech companies would. What we don't do is spend that much money on television and on promotion like most other fintechs do. But we spend a lot of money in enhancing our technology, enhancing our capabilities. For example, till a few years back, okay, no fixed deposits would come in through technology, right? Through online. Everything used to be through agents. Now, about 20% of our fixed deposits come in online. So, which is a big change, not only from a customer delight perspective, but also from a cost saving perspective. Almost 100% of our personal loans to existing customers is online, is through technology, is through digital means. On the two-wheeler front, something which a few years back was the realm uh, of, of canvassers standing in showrooms trying to sell your products. Suddenly now we have moved to a pre-approved two-wheeler kind of a model where a customer logs in, takes a pre-approval online, goes to a showroom, takes a two-wheeler and goes. So so things have changed a lot for organizations, but digital or brick and mortar actually pretty much depends on one, what is the product, ability of you to in delivering the same level of customer delight online, and three, what does the customer prefer. There are a set of customers who don't prefer doing high value transactions online. They would prefer going to a bank, meeting a customer, meeting a bank employee, and then doing those transactions. For those people, you will need to have the branch premises. So to your question, I think branches will stay. Branches will not go away so soon, but the construct of the branch will change. What happens in the branch will change. And that, I think, is and hence, what also needs to happen then is that the skilling of people in the branches, whether it's a bank branch or HFC or NBFC branch, needs to be very different from the current set of people. So I think my long answer to your short question is that branches are here to stay for some time. They will not go away, depending on what business you are in, and the kind of people in the branches, the kind of services rendered by a branch, and the construct will change.
Amazing inputs, Raviji, and I think this whole example of PDs happening online, this is very interesting, and like the whole dynamics changes, interesting insights. Uh, Thank you so much. Let me request Vijay Kumarji to give your perspective.
Yeah, I agree with Ravi to large extent. Uh, as far as the non-life general insurance industry is concerned, I think we have come in long way. There was a time when customer used to visit the branch for getting policies and or maybe lodging a complaint claim, and they have to visit the branches. So now I think we are in in a situation where either every insurance, I'm sure every insurer is trying to do this. Either we bring customer digitally on our portal, on our website, or we go through our partners, reach out to the customers at his or her place, digitally equipped. So in a way, sir, to large extent, I can say that we have completed that piece, to large extent, and this is how today the non-life companies are working. Uh, However, there are still challenges because uh, we have still generation actually who would love to have somebody physically present to answer their queries, or maybe satisfy with respect to claims or policy terms and condition, etc., etc. And um, so this is I think there a lot of change has happened, and there are also certain products which are complex in nature, which has large like property and engineering policies, where a lot of interaction is required. So physically cannot be physical interaction cannot be avoided in those cases. So I think I would say for the retail business, the non-life industry has achieved almost digitalization, and however for non-retail, I think it's a long way to go. I would also, as Shalini, rightly said, I think a lot of credit must go to the this government, actually, central government, who have, provided all the possible enablers, which helped actually non-life insurance company to go digital. Without that, it would not have been possible. For example, today I can, sitting in my office, I can see, whether the, for verification of claim, I can verify the driving license online. I can verify the vehicle particulars online. I can also now, National Health Authority is also coming out with their own portal, which will be similar to Vahan and other portals, where the entire information about the patient, whether on the OPD experience, or whether on the hospitalization, or whether pathological lab, all those informations will be provided by national health authorities. I think the government and the regulator definitely has need to be appreciated for all the effort they have made. Um, so this is what my view on this.
Thanks, Vijayji. I think all the speakers have highlighted this important role for the government, which is pushing digital payments and digital transactions in a big way. And your industry has adopted in a much faster way the digital aspects of the business. So kudos to you. Requesting Mr. Madhusudan to give your perspective, please.
Yeah, yeah, thank you. So I think I'll address this with three perspectives. I think the first perspective is, I think let's look at what has happened in the past when the computers entered mainstream in the business environment. Right, there are lots of apprehensions of what will happen to people, what will happen to the jobs, what will happen to the physical presence of lots of businesses. I think nothing has happened. Right, fundamentally, what it has done is enhance the entire productivity and output for the entire ecosystem in the economy. I think that's what is going to happen this time around as well. The digital is not to probably replace; it is actually to multiply the productivity and the output of the entire industry and ecosystem. That is one perspective. The second perspective, I think, is the customer's choice. I think the business needs to be wired now, keeping the customer's choice in mind. Earlier, I think some of the businesses were hardwired that I need to have a branch because this is how I would do my business. Right? Now that choice does not exist with the business. The customer says, I am getting the service elsewhere. If you cannot give it, I'll go to the other business. I think hence it earlier it was difficult to do some of this flexibility in terms of the business, but now it is far more easier for all of us. The third dimension or perspective is the competition. So I have been interacting with lots of fintech platforms who have entered the capital markets over the last 2 3 years. The difference is in the financial services businesses we are trying to do tech, and in the fintech the tech guys are trying to do the financial services business, right? They bring a very different perspective, right? They don't understand what is not possible. I mean, they don't take it for a no, right? They're challenging the holy cows. They are challenging the normal what we take for granted as to this is how the business needs to be done. They're questioning and they're challenging and showing us the way on how things can be far different than what they're already being done. I think so. Given these three perspectives, I think if the business loses sight of any of these dimensions, I think it's going to be quite difficult to adapt. And we have far more competition and far more choice for the customer that exists today. And all the business need to be nimble enough, flexible enough to make a change, to make the adaptability, to make it work for everyone.
Uh, Great inputs, mhm, Madhusudanji, and you have actually set that tone for the last round of the questions which I wish to ask since we are nearing the end of the session. That the whole era of fintechs has arrived, and every day we are hearing about a new fintech providing a new service or new banks coming in. So the question is that we have seen a lot of changes in this whole BFSI sector in last 18 months. And how are we seeing the uh, next 1 year? This year is ending, and 2022 is coming in, and the world has changed in the terms of digital adoption, and now this whole sea of fintech startups, which is like engrossing the whole ecosystem. So I will like to ask about the general prediction about the 2022 digital fintech and beyond, like overall recovery of economy and overall growth of the BFSI sector itself. So something like a crystal gazing for the next year. So which is of course not easy. No one knows again. We can give it a try. So starting with Shalini ji.
It's great. As you said, it's a little bit of crystal ball gazing. So, as we speak, 3 weeks back, I may have had a different view. Today, a little bit of crystal ball gazing as to what is going to happen. But I think broadly speaking, from a banking perspective, we clearly are bullish about what is going to happen. There is clearly a lot of, coming off a couple of years where things have been difficult. There will be growth. There is definitely going to be growth. That is our view. And we kind of, all banks, including us, are preparing ourselves for it. The other part of it is what you mentioned on fintech. So maybe I'll just say, I think we are very clear that fintechs have a very critical role to play in the ecosystem as a whole. They bring a whole host of capabilities to the table, maybe their agility, their ability to understand the salaried millennial, the ability to understand, how the infrastructure can be leveraged is pretty good and should be well appreciated. Having said that, clearly there is a bond or a collaboration between banks and fintechs that is evolving. And we are, from Federal Bank's perspective, we believe very honestly and completely in the ethos and philosophy that fintechs are collaborators, not competitors, as much as they need banks to be able to offer the services for the customer. The banks need them to be able to kind of get to know the customer better and move the needle on customer experience, move the entire philosophy of customer at the center of everything. So it's a marriage of two equals, and is something that's going to play out quite effectively in the coming months. So broadly saying, in the interest of time, we're quite bullish about next year. If you park Omicron aside for a moment, quite bullish about next year. Fintechs will have a very critical role to play, not as competitors, but as collaborators to banks like us. And Federal is definitely with that philosophy approaching all our fintech partnerships, actually.
Fantastic, Shalini ji. Great inputs. Ravi ji, over to you.
Raviji, the problem of COVID and such a pandemic is that you have no benchmarks. You don't know what's good, what's not so good. You don't know what's right, what's not so right, and so you tend to be very intuitive in your leadership and business planning. And so, while there are a lot of predictions around what's going to happen next year, what's going to happen the year after that, some GDP projections were given just now in the credit policy. I would just hesitate to hazard a guess. We thought everything was okay in April, May this year, in Jan, Feb, March this year, and everybody made truckloads of investments, and then see how everything came collapsing down in April and May and June. We are now hoping that everything is back to normal, but suddenly reading the newspapers these days reminds me of March of 2020, when every day you would say 3 more people, 5 more people, 10 more people, and then suddenly it snowballed into a much bigger crisis than what we anticipated. So while I would hazard a guess, I would not hazard a guess. I would just leave it at that organizations should now not focus on P&L per se for the next 12 months. I think what organizations should focus on is retaining the best talent, skilling their talent in what might emerge as the likely scenario, filling in the gaps in their entire organization hierarchy. You want to go digital, do you have the digital talent? If you don't, acquire them from outside. And four, largely do things which takes you forward, gives your customers a fulfilling experience, and be a lot more proactive in working with your customers. Today what's suddenly happening is that credit quality across the board has deteriorated, right? How many organizations actually work with the customers to see them through this entire pandemic? I don't think many of them are doing it. Okay, all of them are focused on collections, collections, collections. Mera paisa kitna hai? How much is my NPA at the end of the month, end of the quarter? Now, those matrices are all meaningless at this point in time. They are only meaningful if you have a good business model, if your business model is sustainable and is pandemic proof. I would say I'm using pandemic as a very loose word, but I would say crisis proof. You should make sure that your organization survives for tomorrow and make sure that it survives, it's strong, has a truckload of committed people working for you. And once you do that, then whatever business plan you make, you will be able to deliver. So I would not hazard a guess in terms of how the industry would move, what numbers we would deliver. But all I would say is that take care of your people, take care of your employees, make sure that your processes are strong, and you will come out of it. And then you will be able to build a good tomorrow.
Fantastic, Raviji. Great inputs, great insights indeed. Uh, Vijayji, over to you.
Yeah, so definitely we need to be cautious, as Ravi rightly mentioned. But all I can say is that what happened in 2021 was undoubtedly a shock to everyone, to the entire world. And because we have taken things for granted during the last 60, 70, 80 years, because nothing had happened during this period. But looking at, I think the way the government is preparing and the way certain countermeasures have been taken, I think um, we can hope a little more positively. And so, as far as the non-life part is concerned, as I said, even during the pandemic period, also the insurance and the industry grew almost. It was at flat, but some companies definitely grew at a much faster pace. And the health, anyway, is going to be the ruling the entire book. They'll be much bigger than the motor and continue to be so. I think another major change that I foresee, and which is, I think, very, very relevant to the non-life insurance industry, is the change that is happening on the industrial front. The entire drive of central government, with regard to Make in India, I think where probably the manufacturing sector will going to grow at a faster pace, and that is where we have a lot of hope now, going forward, and the insurance industry will bank on those insurance actually. So I see, definitely our industry currently is growing at a rate of around 12%, and I foresee even higher growth next year.
Fantastic. And uh, requesting Mr. Madhu Sudan to
Yeah,
give a remarks,
yeah,
please.
So I'll just put it in three words, and this is my thought process when we are working in the organization. I think plan, prioritize, and prepare. I think this is how I am thinking of building our internal stuff. I think all of us have the plans for a while, but I think when it comes to prioritization over last 18 months, none of us had adequate time to think what is right, what is not right. We picked up any initiative that we felt, we thought was extremely relevant and useful. But I think now we have that opportunity to evaluate and prioritize the initiatives, take five of them, go deep and invest in them, than pick up, let us say, 15 initiatives because somebody else is doing, right? For example, we hear a lot of AI, ML, and a lot of other lingo. but may not be even necessary for your own business, right? So why put resources, why put people behind such stuff that is not even relevant for you? That is where I think prioritization really matters. And the last one is the preparation. Like what Ravi said, obviously, COVID has given us one template in terms of what can go wrong, what can catch you by surprise. And there could be 100 other things that can happen in the future. I think at least it gives all of us an opportunity to bake in a level of uncertainty in our plans and be prepared for it. I think so. That's how I would summarize it. Thanks, Ravi.
Great inputs and a great session. I think we have debated and discussed a lot of issues, and I have personally learned a lot, got some great insights. So I wish to thank each of our speakers for joining in and taking our time. And as a token of gratitude, will present a speaker certificate on the screen. So please accept it virtually from our side. So thank you, Rajeshwar. If you can have this certificate on the screen, please. Shalini ji, thanks for joining in. Really uh, uh, grateful for your insights. Thank you so much.
Thank you. Thank you very much.
Thank you. Thank you, Ravi ji. Thanks for joining in.
Thank you very much.
Yeah, grateful. Vijay ji,
Thank you.
thanks for joining in. Yeah, and Madhu, Susan ji, thanks for joining in, and we are grateful to you for being with us.
Thanks, Ravi. Thanks, Ravi. Thanks, everyone.
So with this, we'll end this session and close this discussion. So thank you so much. Namaskar to
Thank
you.
you very
Thank
much.
you.
Thank you.
Thank
Thanks,
you,
everyone.
Pleasure.
everybody.
Bye
Bye.
bye.
Thank you very much. Thank you.
Thank you.
Thank you.
Thank you, everyone. Thank you, Dr. Ravi Gupta, for joining us for a wonderful moderation. And special thanks to all our panelists for joining us.
Thank you.
Thank you, Ina. Thank you so much.
Thank you. So, with this, I would like to thank our moderator, Dr. Ravi Gupta, for wonderful moderation, our co-panelists, Shalini Warrior, Executive Director and Business Head, Retail, Federal Bank, Ravi Subramanian, Managing Director and Chief Executive Officer, Shriram Housing Finance, Vijay Kumar, Chief Executive Officer and Principal Officer, Go Digit General Insurance, Madhusudan ML, Managing Director and Chief Executive Officer, NSDL Database Management Limited. With this, we'll move on to the next panel discussion. But at 11:45, we'll take a quick break for 10 minutes. I would request our audience to please visit our booth and drop your queries there. We have our partner today, hybrid cloud system partner, Intel and Oracle, digital transformation partner, MapMy India, Neotech partner, Quality Kiosk, data and analytics partner, Tiger Graph, knowledge partner, Resurgent India and Escomi Solution, AI partner, Sathi.ai. So with this, we'll take a quick 10 minutes break and we'll be back soon.